So guys, welcome back to my channel. In this video we are going to analyze the AUDCHF and the trade idea that you can see here being shown, and I'm going to give you the thought process and the analysis that went into making this trade. And this trade, guys, is very awesome. Look at it. It has a risk reward ratio of 8.48. So guys, stick around to the end for you to get why and how I am looking to trade this chart. Okay, now let's go back to the MT4 for the analysis. Okay, so now again, this trading method that I'm using um, is the same trading method that the big banks use to make their trades. What they do is that they look for major levels of supply and demand for them to enter any trade. And whatever happens in between those levels, they really don't care. That's what we're going to do. The same thing. We are looking for trades on major levels of support and resistance. And whatever happens in between those levels, it really doesn't concern us. So until the market gets to whatever level we are interested in, you do nothing. Until then happens, we do nothing. Okay, now what are the major levels of support and resistance in this particular chart? So the short-term trend itself can actually be seen. It's very clear. Look at it. We have a higher. You have a high right here, then a low, then a lower high, another lower low, lower high, lower low, lower high, lower low. So what do we expect? We expect a lower high, then another lower low. So now, where do we expect that to happen? Okay, my strategy involves me actually switching to the line graph for me to see the higher points and the low points clearly. Look at that, it's very clear. So now we then draw the levels that are as close to us as possible. We have this level right here and another level right here. And some fun fact you can actually see the guys that due to us switching to this line graph and being able to see this higher points and lower points, we can actually see that the market has clearly been rejected by this level ID. That's just an extra confirmation. Okay, it doesn't have to come back to this level to enter the entries that have not been entered. It can continue selling, but what we do is that, like I said, we do nothing in between those levels. Now let's go back to the candle version of the chart. So guys, another point is that you don't take these levels as just lines, you need to take them as zones. So we can actually insert um, a shape that's a rectangle at this point. We can magnify the chart for you to view this clearly. Let's magnify this chart. Here we are. And guys, I bet now you can start seeing how the dot process I actually used to come up with this trade, right? Yeah, because it's very easy. Now, where will be the targets be? You know, where will be the targets for this particular chart? You can reduce the size of these candlesticks to actually see the previous action in the market. Okay, so we have this week right there, and we have another weekly week at this point. So basically, we kind of have two targets. Now let's go back to the time we are in, and look at that. This is just beautiful. The market, we note that we didn't draw this level using this lower high or lower low. It just, look at that. The market came in to retest or to test this level right here and bounced off that level. Man, this is just clean. This is very clean. Now, So once we take this trade at this price, that is 0.5896, we are going to have our TPs, the first take profit at 0.56183 and the second take profit at 0.53453. So let's go to trading view for that to be viewed very well. But before we go to trading view, let's first determine the stop loss. How many pips for stop loss? So at this level, the market broke this level, or through the noise, forming 50 pips below that uh, level. We have another level right here, which was broken by the market, forming how many pips? 56 pips. Also at this point, we also see the market breaking the level but coming back in after forming 29 pips beyond the level. So we can have our stop losses about 60 pips. So now let's go back to trading view to see that. Okay, let's just give it 65 pips. Okay, like we said, let me delete this for us to draw a new one. Let's insert the cell. What do we call this? Doodle or picture? I don't know, guys. If you know the name, that just comment it down below. Now the entry price is at 0. Oh, you can actually copy it. This is let's just copy it. Don't wanna annoy myself by repeating the same thing. Okay, here we are. Okay, entry price. Here it is. Paste. Stop loss at 65 pips. 65. And okay, there we go. And what's the first take profit? The first take profit is there. That's 4.13 risk to reward ratio. And what's the second take profit? The second take profit is at this price right here. Horizontal and property. That's 0.534533. So there you go. Okay, here we go. Take profit. Yes. There we go. 8.4. So that's a very good risk to reward ratio, guys. That's a very good risk to reward ratio. Uh, and that's the trade idea on AUDCHF and a little bit of how I do my analysis. So, guys, again, don't forget to like and subscribe and share the video. It might help a brother out there. And thank you for tuning in. For all those who stuck around to the end, uh, I hope this trade idea helps you. And I actually like to view these trade ideas as deals. These are deals that I would not want anyone to miss out on, because this is where you can invest your $100 to make your $840. Guys, this is just nice. Okay, for more information or for any questions about my strategy or anything you want me to teach you, you can comment down below and I'll get back to you. So again, guys, don't forget, like and subscribe for the next video, and don't forget to turn on your bell icon so whenever I post, you're going to be notified. All right, see you in the next video.